Tesla just staged one of the cleanest buy the rumor, sell the news setups we've seen this year, from 273 to 336 in a week, only to fade as the highly anticipated Robotaxi event unfolded. So where does Tesla go from here? Stick around because we're going to walk you through the key technical levels, macro crosswinds, and a precise trading plan you can use immediately. Tesla continues to offer explosive two-way action. After a powerful run from 273 to 336, the stock is now clearly in digestion mode. Thursday's session saw a strong morning rally that failed to sustain above 328. Price rolled over late in the session and closed at 318.88, with continued weakness in the after-hours session down to 317.15. Buyers took profit and stepped aside, and bears regained some short-term control. After-hours action has intensified. Tesla is now trading as low as 311.80 in extended hours, a significant drop of over 2%. This opens the door for either a breakaway gap lower or a potential gap close reversal. Futures are sharply red as well, with SPY trading at 595.38 after hours. If Tesla opens below 313.80, it could accelerate toward the 307.92 or even 304.91 levels quickly. On the flip side, a gap fill back toward 319.10 plus would offer a clean reversal setup. Tesla remains stuck between key Fibonacci zones and moving averages. It lost the 50% retracement level, 321.50, and confirmed a breakdown below 319.10 into the close. Price is now testing prior volume shelf support at 318, with lower levels at 313.80, 307.92, and ultimately the 20-day EMA near 304.91. If those fail, the 200-day MA and trendline support near 297 to 300 becomes the magnet. Despite the drop, daily momentum indicators are trying to form a bullish divergence. The hourly and 30-minute RSI are oversold, but the 5-minute chart shows rejection at the declining 21 EMA. It's a mixed bag. When you're jumping house and ship in the Schalper Tessing, it respect the downside momentum, but stay open to reversal triggers. Bearish continuation scenario, breakdown confirmed. If Tesla fails to reclaim 319.10 and continues to trade below that zone, look for continuation lower into 313.80 and 307.92. Setup, short Tesla June 14, 315p or 310p. Trigger, continued rejection below 319.10 on rising volume. Stop, close back above 321.50. Target 1, 313.80. Target 2, 307.92. If a breakaway gap occurs and Tesla opens below 313.80, adjust the plan and trail puts into 307.92 and 304.91. Watch for a potential gap and go pattern. Bullish reversal scenario. RSI divergence triggers. If Tesla can reclaim 321.50 and flip 323 into support, bulls could attempt to squeeze the tape back toward 328.44. Setup. Long TSLA, June 14th, 325C or 330C. Trigger, 15-minute reclaim of 321.50 plus, break over 323. Stop. Below 318. Target, 1, 326.80. Target 2, 328.44. Gap fill setups are in play. If the market gaps down and reverses strongly back above 319.10, look for a snapback trade into 321.50 or higher. Let's talk about gamma and flow. Earlier this week, call volume exploded, but here's the twist. Was that bullish conviction or call selling into strength? We've seen no new upside follow through. Gamma is neutral to negative right now. That means price could drift unless new flows come in. Let's talk about CPI and macro implications. May's CPI print came in at 2.8% core, YOY, 2.4% headline. Inflation is cooling, but not fast enough to force a Fed pivot. So, what does that mean for Tesla? Risk remains skewed. Tech loves low rates, and if the Fed stays tight, momentum names like Tesla could see profit taking. Tesla's bullish divergence on higher timeframes is clashing with the clear momentum breakdown on the 5 and 15-minute charts. If 319.10 holds as resistance, we likely retest 313.80 or lower, but a reclaim of 321.50 could spark a reversal. With SPY also gapping down to 595 after hours, broader risk-off sentiment is likely to weigh on Tesla at the open. Expect volatility. Key levels: support 319.10, 313.80, 307.92, 304.91. Resistance 321.50, 323, 326.80, 328.44. Be nimble and reactive. Friday should bring range expansion and potentially a directional resolution. Section 6. SPY Market Snapshot. Bearish below 597.50. This level represents a break of the recent range low and confirms a downside move. Targets: 593.80, first magnet, 589.50, gap fill level, 586, channel support and prior base, bullish above 598.80. A reclaim of this level signals strength and a potential gap fill reversal. Targets: 601.90, pivot, 604.93, range high in R1, 606.37, upper resistance. SPY bounced from 598 to 603 intraday, but keep an eye on 604.93. It's the wall that's rejected bulls all week. If we break it, 606.26 is the next magnet. After a sharp morning fade to 598, SPY rebounded with authority, reclaiming key pivot levels and marching right back into the upper half of its range. Buyers defended the 30-minute channel low and pushed SPY to a session high of 603.37, just beneath the major intraday resistance at 604.93. The chart shows clear respect for both range and momentum zones, which makes this one of the cleanest technical environments we've seen in weeks. Thursday's move came in the wake of CPI and FOMC volatility, which has now been largely digested. SPY remains inside a rising channel with well-defined support at 598.97 and resistance near 608.19. The daily chart is extended, with RSI pressing 66.64 and stochastics tagging overbought. Yet, price is riding the upper Bollinger Band with a clean 821 EMA slope. This suggests pullbacks are still being bought until proven otherwise. Bullish scenario: break and hold above 604.93. If SPY can break above 604.93 with a 15-minute candle close and rising volume, expect upside continuation towards 606.26 and 607.69. Setup: long SPY. June 14 605C or 607C trigger. Break and close above 604.93, stop below 603, target 1606.26, target 2607.69. Volume profile: support sits near 595 while bulls are focused on breaking out above 605 to trigger continuation. Bearish scenario: rejection at resistance. Plus, break of 601.90. A failed breakout at 604.93 followed by a loss of 601.90 pivot would confirm a short-term top. That could trigger a fast drop back into 598.73 and possibly 595.38 channel midline support. Another setup is we load SPY. June 14 600P or 597P trigger, rejection at 604.93 plus loss of 604.90 stop, close above 603.50, target 1, 598.73, target 2, 595.38 SPY is pressing higher inside a rising channel, but the 604.93 level remains the final boss. A clean breakout opens the door to new highs. A failed breakout and rejection could trigger a healthy pullback into previously defended zones. Key levels to watch. Support 601.90, 598.73, and 595.38. Resistance is at 604.93, 606.26, and 607.69. Stay reactive. Wait for price to confirm. Let structure dictate your bias. If you want to see how we extract alpha on SPY live, make sure you're connected to our real-time mobile alerts. The next entry could come fast. Want to see us trade Tesla in real time? Make sure you're connected to our mobile alerts. The next move could be moments away. Today's June 12th, and we've already booked $3,300 in gains per contract for June, and we got a couple more weeks to go. If you want to trade these setups with us live, make sure your mobile device is connected to our instant alerts. And drop a comment. Will Tesla break 336 this week, or are we heading for 307? I'll see you in the next one.